Whew. Good morning, everybody. Welcome to our last pre-market prep session of the week, October 4th, 2024. What do we do during these sessions? Stevie, make it a little more light in. Come on. During these sessions, we go over the important news, notes, analysis, and as of right now, we've got Puppy hanging with us. Was in a bit of a rush this morning. Now she's not in the crate; she's with us. But we go over all the important news, notes, and analysis necessary, to remain consistently profitable here in these crazy markets. It's been a bloodbath in terms of this price action. Look at the price action from yesterday; absolutely disgusting, right? And what did I talk about? Having that guide, someone with the experience to tell you to say, hey, sit this out, right? It's very important, right? It's very important. And it's a very useful thing because otherwise you just destroy yourself trying to play and trade price action that you have no business trading. I mean, those candlesticks, just go look at the 5 minute chart from yesterday. It was an absolute blender, right? An absolute blender. People got destroyed, and it's been like that for weeks. So knowing when to hold them and knowing when to fold them is a huge, huge, huge thing. So I'm glad that we've been on the right side of that. We've been cautious and we've been patient because it has been a mess. There's nothing better than looking and seeing that you avoided some mess, right? When you leave the family gathering, you heard, oh, something happened. These cousins got into a fight, and it was like, oh man, I'm so glad I left before that mess. That's us, right? I'm very appreciative of that. But that comes, via experience, right? Experience and being able to pass that experience on. So I'm happy to be able to do that to you guys, as well as, making sure that we're winning a few plays along the way. Energy is coming very clutch for us. Occidental Petroleum moving very nicely. We played TLT to the downside for some nice money, CBX to the upside for some nice money. UPS not wanting to show us any favors short term, but there's always going to be some red as long as the green outweighs it. Then you're fine. And even if the red does outweigh the green a few times, you either win or you learn. So that becomes the foundation for your next victory. Speaking of foundation for victory, make sure you throw those ones in the chat signifying your intention to get 1% better by the end of this session. That's what we want. That's what we're here for. As long as we can do that, it was a successful session. So let's hop on our top news here. Payrolls in focus. All right, fooling around back there. As the Federal Reserve is now more confident that inflation is sustainably easing toward 2%, it is shifting some of its attention to the maximum employment part of its dual mandate. The Labor Department's closely watched non-farm payrolls report due this morning is expected to show that the labor market is continuing to ease. Employment check in recent months job creation activity has moderated and the unemployment rate has risen, though it's still at a historically low level. Fed Chair Jerome Powell said recently, quote, we do not seek nor welcome further cooling in labor market conditions, indicating that jobs have become more of a concern. This week saw two key data points. Job openings unexpectedly jumped in August, while private non-farm payrolls strengthened more than expected in summer. So what to expect? The non-farm payrolls number is expected to show 132.5 thousand jobs were added in September, down from 142,000 in August. The consensus may be on the low side, according to Sam Millett, director of fixed income at Commonwealth Financial Network, who wouldn't be surprised by a move closer to 200K. Diane Swank, chief economist at KPMG, is anticipating a subdued print of 120,000, noting the slower pace of hiring, lower quits rate, and smaller wage boost for people who change jobs. Now, seeking alpha commentary, the markets may have fallen into a false sense of security ahead of the September jobs report, cautioned Michael Kramer, who manages investing group leader Mott Capital. While continuing jobless claims have remained calm, the market appears to have taken that to mean that the labor market is fine. Quote, this leaves the market vulnerable to upside surprise in the unemployment rate because the claims data doesn't capture everything that goes into rising unemployment. So, all eyes on non-farm payrolls here this morning. It expected to show 132.5 thousand jobs added in September. Let's see what actually ended up being the case here. Shares. Okay, so U.S. unemployment rate actual 4.1% versus 4.2% previous, 4.2% estimated. So it looks like unemployment rate was a little bit better than expected, which is bullish. U.S. labor September non-farm payrolls 254,000, consensus 150,000. Um, so it looks like we added what 254,000. U.S. September unemployment rate 4.1%, consensus 4.2, hourly earnings. So it looks like U.S. short-term interest rate futures drop as traders price in fewer Fed rate reductions after September jobs data. Traders pair bets on November Fed rate cut larger than 25 basis points. Traders add two bets that Fed will stick to 25 basis point rate cut in both November and December after strong jobs data. And that's the big thing, right? Is that there's so many layers to whatever pieces of data that we get now because you get this information, you're like, oh, okay, cool, unemployment is down more than expected and we added more jobs and that's bullish, right? Well, no, right? Not really. It can definitely be interpreted as bearish because why are we cutting in the first place? Why are we cutting by a 50 basis point cut to start off the cuts in the first place? Well, it's because the labor market is weak. So if this data is showing the labor market is strong, then what does that mean? That means that we don't need a 50 basis point cut next time. We can go with the 25, right? It means that we might not need as many cuts overall as we thought we did. So you want to see a weak labor market. You want to see weak employment data because then that says, that tells the Fed, okay, we really gotta make sure that we keep it up in terms of this dovishness and keep these hikes of larger magnitude. So we'll see how the market reacts to all of it because at the end of the day, we can have all these different hypotheses and none of them matter. All that matters is what the end outcome of the market ends up being. That's why we're waiting for that, right? Show us what we end up getting, and then we can operate and put real money behind what we get from that. Let's see here. Other than that, it's been short newsletters literally all week. So other than that, we can finish up with our rapid fire stock news rundown here. Pork strike ends. That was quick. Workers reached tentative deal with 62% wage hike. I think they're putting it off until like January or something. They're revisiting it. Um, that's funny, like, literally out of nowhere, just your wages hiked by 62%. I mean, they wanted to double it, so I guess this is good progress. Report Spirit Airlines, right? Their ticker is SAVE, in talks with creditors for bankruptcy filing. They dumped overnight off that news. Tesla's information chief exits ahead of robo-taxi event. Hmm. Reality check, Duke delays shutting largest coal-fired plant. OpenAI discloses new $4 billion credit facility with bank consortium. That smells fishy. Senator Warren seeks growth limits on Citi, like Citibank, ticker C in letter to OCC. GOP senators probe New York Fed. Make sure you're not getting into anything. GOP senators probe New York Fed on Iraq bank flows to Iran. What? Lilly GLP-1 shortage ends. Hims and hers slides. AbbVie ticker ABBV cuts earnings forecast due to R&D expenses. Risk is on for Wall Street traders as traders. Risk on for Wall Street as traders pour money into ETFs. So I guess ETFs are seeing a lot of inflows. Let's see. Are we still like this? Oh, nice push up overnight there on SPY. Not good for that little small batch of risky puts that I indulged in here before close, but small size can't be mad at it using a percentage of profits. That's how you got to play these until you get any like definitive answer. It's all got to be playing stuff light, and that's exactly how it was. You need to be doing one contract, right, two contracts of things, and letting it go. And if something's too risky, right, or super risky, and you're sitting there with a $500 account, $300 account, definitely don't touch it. Right, definitely don't touch it. But we might actually get some direction here. We might get some conviction. We've got to see. I'd enjoy it if so. I mean, I would love if we would go down to like touch the actual level that I would like for us to touch. But we'll see. Spy with some hourly double bottom potential here. The only issue is that we might have like hit the price target for that already, which isn't much fun. Yeah, we pretty much open on top of hourly price target number 2. So we'll see if SPY gives us any fun movement here, today during this session. If not, though, we'll be sure to remain patient. All of this information has changed in terms of like where markets are. So I don't really think it's necessary for me to go over it because all that has changed. Today, what do we have? Just that data that we got. We've got a member of the Fed, Williams, speaking at 9 a.m., which is now, but no one cares about that because Williams hasn't moved the market. So, knock on wood, that continues to remain the same. But we don't want to remain the same. Us, right? We want to be getting a little bit better each and every day. And I'm proud to say that we did that here today, going over all these important news and notes as well as how to process this information. So we'll be looking to see SPY. Do we bounce and do we hold? Right? We saw over 5 million in puts come in, shorter term Monday dated puts come in yesterday, which means that number one, either we were expected to go down or someone might have taken a huge position to the upside because usually seeing that much in puts isn't done by accident, right? That's done by like, I think that this is going to happen. So it could have been in advance of non-farm payrolls, but if that was a hedge, then it was a hedge for a tremendous upside bet. So now we kind of get to see, okay, what do we end up doing? Because we're in that limbo again where we're in a rising wedge where we can definitely fall, right? And October is a very volatile month, one of the most volatile months of the year. But we're also retracing breakout support, so we get a nice bounce. We got to wait to see, and the market will show us which is which. But I bid you all adieu. Have an amazing weekend, an amazing rest of your day. I'll see you back here on Monday for our next pre-market prep session. Have a good one.